Hello guys, my name's Colin and this is Colin Talks Crypto. We are at the beginning of an enormous bull run, believe it or not. I know that it can seem difficult to believe that in light of the current economic situation, but the halving is not going anywhere. The halving is going to cut supply issuance to the Bitcoin blockchain in about 30 days. And historically, 2 to 6 months after that happens, the bull run begins. The ascent begins, slowly at first and more steeply in time, whereupon it culminates in a new all-time high that is drastically higher than any peak we've ever seen before. So the question I want to pose in this video is, how high are fees going to go for transactions on the Bitcoin network in the next upcoming bull run? And I want to hear your predictions in the comments below. Thanks for joining me. So I want to show you a couple of sites and a couple of images. Right here we have fork.lol, and if you scroll down they have transaction fees, the last 24-hour averages, and the right column is Bitcoin Cash, the left column is Bitcoin. So you have a comparison here. Obviously Bitcoin Cash is much less expensive for transaction fees due to its larger block size. But if you look at the current price, 82 cents US dollars per kilobyte for a transaction fee on the Bitcoin network. Now let's take a look at this historical graph here. This goes back to January 2011. There's not really much you can see here. There weren't that many transactions occurring on the network at that time. So we're going to zoom in to 2016 onward. Now look what happened in December of 2017. This was right around the time where we had our $20,000 all-time high for Bitcoin. And look on the left there. What do you see the average transaction fee for Bitcoin was? $54.90. We'll round up and just say $55 per transaction, regardless of how much you were sending. This figure did not rely on whether you sent $100 or $1 million. It was based on the data size being sent. So an average of $55 per transaction in December of 2017, compared with Bitcoin Cash's 33 cents. Still kind of high, but night and day comparison, obviously. Now we're going to zoom in to more recently to, let's go to today. Right here on the right side of the graph, we have the transaction fees as of today. Bitcoin weighing in at 50 cents per transaction on average. And again, Bitcoin Cash having 0.2 of a cent transaction fee. So if I wanted to use cash, digital cash, electronic cash, the Bitcoin white paper, peer-to-peer, electronic cash, I would be using Bitcoin Cash right now. And there are other blockchains as well. You could use EOS to have feeless transactions. However, the fee is paid for by inflation. So it's not free, but it's feeless. And you could use any multitude of other blockchains. Even Litecoin has smaller fees than Bitcoin, although it is based on the same technology stack, essentially. So I think that in time it would encounter the same problems as Bitcoin. But anyways, there you go, 50 cents per fee today, April 11th, for a single Bitcoin transaction. So the question is if we have a 50-cent fee today when the price is not at the all-time high, what happens when we hit this next peak like we did in December of 2017? Now, to put this in perspective, let's look at the last bull run peak, and that was around December of 2013, right around here. You can't see it on this graph, but here it is, because it's dwarfed so much by this peak right here. And the same thing is going to happen. So this peak here, where we have $50 transaction fees in December 2017 with a $20,000 Bitcoin price, this peak is going to become this peak right here. It's going to become almost invisible on the chart in relationship to the next peak, whatever price that may be. Now, if you can't see the fees on this chart here, and then you can see a $50 fee here, what is the fee going to be for the next peak? And I want you guys to put in the comments below, what do you think? What do you predict? Let's make this a prediction. Whoever wins the prediction, whoever gets closest, no, I'm not going to give anything away, but please put your prediction in the comments below of what price you think that it's going to hit in the next bull run peak. What's that Bitcoin transaction fee? And if you want, also include your prediction for the Bitcoin Cash transaction fee at the next bull run peak. And let's see who's closest. And I will announce, that'll be the reward. I will announce the winner of who is closest in prediction in the terms of fee during the next bull run peak. And why is this? Why is it that the fee went so high? So I have two visuals here for you. The first one's very simple. We have the blue line here is the block size. And obviously it started around a third of a block. Here in July 2015, it hit 0.6 of a block, 60% of a 1 megabyte block size. And then as we move on, you can see it's very predictable trajectory here. And the red line, red horizontal line here is the 1 megabyte block size. And as we hit up against it, then the block size obviously could not grow larger than the limit. But what would we have seen in terms of block size? And the reason we want to compare that is because, generally speaking, the more data in the block means the more transactions in the block. And the more transactions in the block means more economic activity happening. And so if you take this dotted red line as the trajectory, a very obvious trajectory that was happening, we would have been up here had not we hit the limit of 1 megabyte. And so what this resulted in was an enormous amount of missed economic activity on the Bitcoin blockchain. And then later, too little, too late, we had SegWit, which didn't alleviate even enough, but still pushed away an enormous amount of potential economic activity. And to this day, I think we have missed out on enormous volumes of economic activity and price for Bitcoin, all because of this one decision to not raise the 1 megabyte block size limit. I think that was perhaps Bitcoin's greatest failure. And in the future, when we look back in 20 or 40 years, we're going to look back at this being the greatest failure that Bitcoin ever had. And I think that this is what spawned the entire altcoin market, and this is what pushed away all that potential activity onto other blockchains. So I'm going to show you another chart here, and this chart is similar. It's got the red line, 1 megabyte block size, and you can see the predicted trajectory of the existing block size and how it stops. And it would have been up here, but it stopped and it stunted, and it actually dropped after that. And the thing on this chart that's very interesting is showing the timing between that 1 megabyte block size cap being hit and the Bitcoin dominance taking a sharp plunge downward. And I think you'd be very hard pressed to call that a coincidence or an accident. Bitcoin would have continued going up in transactions, the block size would have continued to increase had the limit been raised, and Bitcoin dominance would have stayed just as high because the likes of Ethereum and Ripple and these other coins back at this time period would have had no reason to be adopted if it weren't for the $50 transaction fees, as we saw earlier. So again, I do feel that this is the greatest mistake that Bitcoin and Bitcoin developers have ever made with their software. I think that they've done a lot of other things right, but that one factor right there, basically, I think this is my prediction that in 10 years, Bitcoin is no longer going to be number one unless it has raised its block size. And if it doesn't, it's not going to be number one. There will be a successor, whether that's Bitcoin Cash, Ethereum, or some yet to be token. I can't tell you, but it's not going to be Bitcoin with a pathetically small block size limit. And while we're on the subject, of course, the most common rebuttal that anyone's going to say in the comment section is going to be Lightning Network. And Lightning Network is an attempt at an off-chain scaling mechanism with centralized hubs to attempt to increase the scaling. But as you can see, just as far as timing goes, it's not only too little too late, it's way too late. I mean, it's so late that Bitcoin has lost an enormous several years worth of transaction volume, all due to this failure to plan and failure to scale. Lightning Network right now is in beta. It's ironically a beta being run on a live blockchain, which is another stupid idea. But the fact that it's in beta and it's barely adopted at all goes to show you that this was a poor decision. All you needed to do was increase the block size to a measly 2 megabytes and buy yourself another couple years, but they didn't do that. I came to crypto to be my own bank, to store my own wealth, to take back control of my money, and so I'll be damned if I'm going back to a system that gives me an IOU or is not a blockchain itself token. So Lightning Network is fine as an experiment if you weren't depending on it and solely reliant on it as your scaling mechanism when it's a beta piece of software that hasn't come to fruition in a mainstream sense, even 3 years after the block size limit has been reached. And another really important point I want to get across is that it takes a number of years. I mean, look how long it took Bitcoin to reach this level of adoption. It took 7 years to get to the point where we hit the 1 megabyte cap. That's 7 years that it took to grow. How long is it going to take for some new technology like Lightning to get adopted by just as many people? I think it's going to take 5+ years. And again, it's stupid planning because it's too late. So maybe eventually in 5-10 years, we'll have a significant number of people using Lightning, but I don't know if it's even technologically capable of that based on the decentralized routing problem, unless they do end up just solving it with a centralized method, which would not surprise me at all. So these two charts are the reason why the price and the fee per transaction went up, purely because we hit that block size limit, because there was no more free room in each block. Therefore, users had to compete in a fee market to get into the next block. And if you don't pay enough, then you get outbid by someone else, and your transaction could take hours upon hours and or days to get confirmed in a situation, especially in a peak situation where you have the next bull run high being approached. And so when you have an exponential peak in the new number of users onboarding, guess what's going to happen to the number of people competing to get into that block? The block size is going to be jam-packed yet again, and I predict we're going to see fees upwards of $200. That's my prediction. Very high fees coming up in the next bull run. And I think that we are going to see another divergence in the Bitcoin dominance chart where it drops precipitously as some of the top altcoin contenders soak up all that pushed away volume and transactions and user base. And if Lightning Network was ready at that time, then that might not be the case. But I really don't think that global adoption of a new technology, layer 2 on top of Bitcoin, is going to take place in the next 1 to 2 years maximum. I think that we'll have a very, very small percentage of apps and exchanges and wallets using Lightning Network, and it won't be enough to alleviate congestion. That is my prediction.